Finance Minister Enoch Godongwana did not only have to allay the fears of South Africans in his budget today. Elsewhere in the world's ratings agencies, analysts and investors would have listened keenly to the Finance Minister's latest budget to hear the government's plans for the power crisis and economic growth. Let's talk about this with Chief Economist and Head of Research for Middle East and Africa at Standard Chartered Bank, Raiza, who's joining us from London, I believe. A very good evening to you, Raiza. Grateful for your time. First things first, do you believe that the Finance Minister has done enough with this budget speech today to convince international markets that this country's energy crisis will be dealt with in the near future?
Well, I think there were certainly positive surprises in this budget, and it will probably take a while for different market participants, different stakeholders to digest this fully. But the immediate market reaction to the budget was positive. There's no question about it. And this is because of some of the unexpected good news, namely that South Africa achieves a primary fiscal surplus, something it hasn't done in a good long while, as early as the current fiscal year. There had been big fears that the power sector crisis would mean a sharp downward revision of the growth forecasts. And that didn't turn out to be the case. But there is, of course, a distinction between the growth forecasts of the Treasury and whether South Africa really does have an ability to get over this power sector crisis, to overcome the immediate threats. Now, of course, the big takeaway on that front, not just the Eskom debt transfer, but in a much more meaningful sense for most South Africans, the tax relief that will be granted for solar generation. I do fundamentally believe that this is a step in the right direction, the adoption of greater renewables, accelerating the investment in the capacity to generate electricity through renewables, not just for big companies, but also for smaller businesses, for households. This will be meaningful over time. Has it been enough to convince markets that the immediate pressures of the power sector crisis are going to be lessened? That is less clear for now.
And you mentioned growth just earlier on at 1.3%. The forecast from Treasury for growth in this year is lower than what is expected in other emerging economies globally. Would that be a concern for investors?
Now, this has always been a concern when comparing South Africa to other emerging markets, to other more rapidly growing economies, even those economies that are known to have a great deal of trouble with their debt overhangs, somehow still manage a faster growth rate than the South African economy is capable of right now. There are two parts to this. One is that when it comes to growth, for a good long while still, South Africa really hasn't hit the ball out of the ballpark. There have been elements of upside surprise, 2022, for example. There's good momentum earlier on in terms of mining revenue that helped the fiscal picture. But fundamentally, it's been such a long time since South Africa really surprised positively with its ability to not just achieve, but sustain meaningful growth. The other point is around the near and medium-term growth forecasts. We know that recently there has been a downgrading of growth expectations, our private sector forecasts for growth even lower than that of the Treasury's. Are these growth numbers going to be borne out? Is there something to the optimism? We may be reaching a turning point. It could be that greater resilience to the power sector crisis is being built into that economy, and Treasury would be right to take that into account. But we should also be very clear that in the eyes of many market participants, in the eyes of many stakeholders, there are real downside risks to these growth forecasts. And those fears will have to be dealt with. They'll have to be proven otherwise. South Africa can only do that through the actual demonstration of faster growth. We don't yet know that we are there.
And speaking of perspective and everyone else who's looking on at the situation in South Africa, ratings agency will be among them. And they would have been looking for certainty, consistency. We hear this every year when it comes to the country's fiscal path. Do you think the Finance Minister Godongwana today, from what he said today, is still doing well in towing that line?
Well, there are certainly many measures that will be pleasing to the ratings agencies. the fact that South Africa does achieve what we call a primary fiscal surplus, that is, take away the debt service costs, just the difference between spending and revenue, South Africa is actually doing better, and it's doing better right now. That will be important to ratings agencies. But if they're looking into the future and looking at longer-term debt dynamics, we know that with the absorption of some of Eskom's debt by the state, necessary support to be able to help Eskom do what it needs to do to overcome this crisis, nonetheless, that means South Africa's overall debt peaks at a higher level of GDP and peaks a lot later than had previously been forecast. That is, the stabilization of debt levels, when we expect things to start improving, that's pushed out into the future. And the problem that ratings agencies will have is that against what still looks to be a very weak growth profile, especially compared to similarly rated economies, South Africa still has taken on a lot of debt. And its debt service costs, notwithstanding what happens with the primary fiscal surplus and the good news on that front, its debt service costs as a percentage of revenue are still moving in the wrong direction. So, yes, there are important positives, but I think the overall message will be one of caution. South Africa has a lot to do to be able to prove itself still.
South Africa has also got a big debt problem. Any indications from this budget that debt to GDP ratios in one of the leading economies on this continent, the African continent, will actually be reduced at a satisfactory level?
So this is the important thing. If any government is serious about reducing its debt, or any entity, if it's going to be serious about reducing its debt, the first thing that it gets right is that balance between expenditure and what it receives in revenue. And on that front, there has been good news for South Africa. Much earlier than expected, it is achieving a primary fiscal surplus. This means there have been good improvements with revenue collection. Those revenue improvements are expected to be sustained over the medium term. The revenue numbers were raised not just for the current period, but for some of the outer years as well.
Right.
And this is good news. It means that South Africa is doing what it takes to try to reduce that debt burden.
And the popularity of the popular South African phrase that the country is open for business has appeared to wane in recent times. The president says, well, not true, people are still interested in investing here. But what can government change in order to convince more investors that this is the perfect destination for their money?
South Africa has been greatly disadvantaged, not just by the governance issues of the past, but also by the fact that for most investors, they will perceive a very low growth rate with significant risks if social inequalities are not dealt with. Now, however, there is a unique opportunity for South Africa. If you look at where the investment funds are growing globally, there is a lot more interest in supporting the climate transition. Some might say, well, South Africa really needs more support on this front, and it needs to be support in the way of grants, not loans. But let's not get away from the fact that there is climate financing available. And investors, whether portfolio investors, whether real economy investors, are looking to support that transition. So for the first time in a long time, South Africa has something realistic to offer to investors on that front. Because of the Eskom problems, there is the necessity of moving away from coal-fired generation. There is the necessity of accelerating that transition towards renewables.
Right.
This is what the South African economy needs to be able to guarantee future growth, and it's exactly where investor interest globally is starting to rise in a big way. So is South Africa open for business? A lot could still be done in terms of improving the overall perceptions of the business climate, but this is an important step forward.
And in about 30 seconds, Raiza, what would be the financial impact of a possible grey listing by the Financial Task Force if that decision does indeed come through this week?
Now, this is one of the risks, the big near-term risks that's looming. And of course, markets have known about this for some time. It's not going to be positive, But there is an argument that a lot of that bad news may already be priced in. So yes, expect to see some adverse market reaction, but at least today we were in sight of a few positives to offset what may inevitably be the case come Friday.
Raiza, I can't get to speak to you tonight.